we are fortunate here now to have actually three speakers who work together on this paper. And the first paper to look into financial technology or fintech, first paper in 2023 to be presented here within the Center for Global Finance in the area of fintech. It's an interesting paper that looks at non-fungible tokens, NFTs, and it's also a preliminary paper, work in progress. And as usual, we use this platform of the Center for Global Finance Seminars to look into new ideas, look for avenues of value additionality, look into techniques, theory, applications. And so basically, we hope that by the end of this seminar, not only will we have benefited from the knowledge that the authors have put together, but we're also able to provide important feedback for the authors to continue this work. It's therefore great pleasure to welcome the three authors. And the work will be mainly presented by Dr. Efthymios Rizopoulos, who actually is not a stranger to a Center for Global Finance. Just only very recently, Efthymios used to be an important driver of the key driver of the Center for Global Finance. Worked here as a postdoc, a research fellow within the Center for Global Finance. And he's now a research associate at Alliance Manchester Business School at the University of Manchester, and has now 6 years experience in market microstructure, financial economics, trading, equities, economic development, banking, and this particular area of fintech. And he has very well developed analytical and problem-solving skills, and also a brilliant a track record of dealing with large data sets and data management, including Bloomberg, Thomson Reuters, data stream, and YPRWDS, which is one of the strong, one of the helpful databases. Does quite a lot of financial modeling and programming using MATLAB, R, and Python, very important for in the applications of artificial intelligence and machine learning. And indeed, this is one of the great contributions that he's working on. And the paper is jointly with his colleagues at the University of Manchester, Professor Markos, Zachariadis, who is a professor in fintech and one of these big names in the area, and Dr. Lavinia Rognone, who is also at the University of Manchester. I should add that it's a great pleasure to have both Efthymios and Markos, with whom we published, jointly with myself, a paper on fintech last year in RFA. And also, of course, to welcome Lavinia for the first time, I guess, the first time ever in the Center for Global Finance here at SOAS University of London. So we are absolutely fortunate to have the expertise of these three co-authors coming to share with us their work on non-fungible tokens. And two housekeeping points I'd like to make. One is that we can give our comments in the chat and feedback in the chat for the time being. But of course, if you feel that the point is pressing and maybe you have to leave, You may then possibly you can put your hand up using the reaction button in Teams, and then I will be able to catch your eye, or Athena will be able to catch your eye, and we ask you to contribute. Otherwise, we can always have a discussion of question and answers right at the end of the paper. Meanwhile, I'll be able to pick up some of the points you put in the chat as we start the discussion. The second point is that Efthymios will do the presentation, but both Markos and Lavinia may come in as we go. It might even be a three-person drama as we continue the discussion. So once again, let me welcome everybody, and let me encourage all colleagues in the true spirit of fellowship of the Center for Global Finance to provide as many comments and feedback on the paper, and appreciate the work that's being presented here. Okay, so Efthymios, welcome back to Center for Global Finance, SOAS, and please go ahead and present the paper. Welcome.
Thank you, Victor, and for the kind words, and thank you also for the opportunity to present this paper. I apologize for my voice. I'm recovering from a cold. It is always nice to be back to the place where you had your first job. I'm always happy to be here. And this is a paper in collaboration with two of my colleagues, as you said, Lavinia, Rognone, and Markos Zachariadis from Alliance Manchester Business School. It is indeed a work in progress. Even the title is provisional, so any feedback or comments are really, really welcome. It will help us to take it further. And I will just, before I talk about the paper, I would just try to talk a little bit about this space and help the audience to get some brief understanding about how this works. So in the past year, in the recent years, financial technology has been driving innovation in financial markets, and the digital assets are in the heart of this trend. And by digital assets, we basically mean anything that exists only in digital form and comes with a distinct user's right. Now, this may include virtually anything of value that is not tangible in nature. So you can think of software code, digital music, film clips, but the term has been expanded to include investable assets, such as cryptocurrencies, non-fungible tokens, asset-backed tokens, tokenized real estate, and so on. Now, using cryptographic technology, digital assets are secured, exchanged, and verified in decentralized digital ledgers. Um, the digital assets market is gradually becoming integrated in the existing fabric of traditional financial markets. And although in the past we have only native to blockchain investors mainly participating in the digital assets market, in recent years, this has changed. And we have seen institutional investors including digital assets in their portfolios, investing and forming partnerships to explore further this trend. Now, a recent survey by Deloitte 2021 actually shows that 80% of the leaders of financial institutions believe that digital assets should become a strategic priority. Now, since November 2021, the global market value of digital assets halved from 3 trillion to 1.5 trillion approximately. Of course, this is nothing new for a market which is infamous for the volatility. But this downturn, this time, there is some suggestion that is connecting to more traditional economic factors, such as high inflation, planned interest rate hikes, and a sell-off in the traditional stock market. And although there is this popular perception that digital assets do not move with traditional financial market fluctuations, And for example, Bitcoin is particularly is a good hedge against inflation. This recent trend seems to show that there might be a closer relationship between these two markets. And at the same time, we had, this drop in the stock market. Think of S&P 500 or Nasdaq. We had also a sell-off in digital assets, and and maybe this is part of the same broader risk of dynamic. And to connect this to what I mentioned just before, this can be thought of as the other side of the coin when it comes to the greater institutional adoption. So when institutional investors decide to unweight their positions, sell as part of of a risk of play, they do so across asset classes, and they won't hesitate to cut losses. So this might be, a reason why we see this downturn in the value of the assets, digital assets market. Which makes it even more interesting to look more into this market. And part of this market, as I mentioned, is the NFTs. And there has been this NFT craze, as we call it, in the past couple of years. And actually, these pictures here are not actually pictures or photos; they're actually NFTs, and they are NFTs of famous people, celebrities. So you can see, for example, you can see Ellen DeGeneres, Lindsay Lohan, Paris Hilton, Bella Hadid, Emily Ratajkowski, and then you have some NFTs by Snoop Dogg and Eminem here. So, um, and these two ones in the top, which are the stars of this slide, basically, is the Twitter, the first Twitter by Jack Dorsey, who is the co-founder and used to be the CEO of Twitter. And this NFT particularly was sold for 2.9 million. And then you have this piece of art here by Beeple. It's called Every Day is the first 5,000 days, that was sold for 69 million. So this probably would justify the title about the craze. And to take it a little bit more further, my parents probably in their 30s, they would think of buying a second house for the family vacation, and they will think whether the garage is big enough to fit their cars, whether the house is good enough for the family. And now you have people in their 30s think whether they should buy a pet NFT rock for 40,000. Again, in the same line, when my parents were in their 30s, buying a house would be considered a great investment. And now you have probably people selling their house to buy just a JPEG of an ape. And they would still think that this is a solid investment. And although these are kind of extreme examples, they would just, I'm sure that probably have happened in the past couple of years. But when we talk about NFTs, what is an NFT? Or else non-fungible token. So at the basic level, an NFT is a digital asset that links ownership to unique physical or digital items. And NFTs aren't interchangeable. This means with NFTs, each token has unique properties and isn't worth the same amount as other similar tokens. So this is a distinct difference with cryptocurrencies. Like if I have a Bitcoin and you have a Bitcoin and you give me yours and I give you my Bitcoin, we still have one Bitcoin and it's the same. But with NFTs, this is not the case. Now, but why we should care? Why we want to investigate this market on top of the fact that there is, we don't know a lot of things about this market because it's relatively new and the literature is kind of nascent, especially the finance literature. NFTs are a new way of creative expression. They bring together content creators from different spaces into one ecosystem, and this kind of promotes the inclusive growth. But most importantly, they have these three attributes: the enhanced authenticity, the ability to verify ownership, and ownership fractionality. And now To talk a little bit more about this, your digital asset or physical asset can be replicated. It can be also faked. But the link to the authentic one, which is what is NFT about, cannot change. And this is what NFTs bring to the table. Now, when it comes to ownership fractionality, another important attribute, this can have future applications to things like you can think of housing, or maybe you can think of a song and your own part of the song, and so on. And of course, the NFTs, being based on blockchain technology, they offer security and improve market efficiency. Now, another important thing about NFTs is the prospect of decentralized finance. And recently, there is this ongoing debate of creating two versions of decentralized finance space, one regulated and one unregulated. And kind of this shows, that the market participants and regulators think that there is a lot of potential there. And we believe that NFTs will be an integral part of the decentralized finance space. We have seen NFTs actually being used as a collateral for financing on the blockchain. And finally, when it comes to metaverse, if and when this becomes a thing, we feel that NFTs are going to play an important role for the governance of the metaverse. Now, looking at the NFT market in brief, if you go and try to find how the market looks like, you will see that the majority of the NFT projects actually are based on the Ethereum blockchain. Of course, there are other NFT chains such as Solana, Binance Chain, Tezos, Flow, in Polygon, but as you move away from the Ethereum blockchain, then you will see the liquidity basically starts decreasing. And when it comes to the token standards, the most popular token standards for NFT are actually two: the ERC 721, which is dedicated to non-fungible tokens, and the ERC 1155, which actually allows for both fungible and non-fungible tokens. And by token standards, for those that don't know, basically it's a set of agreed upon rules that guide the design, development, behavior, and operation of the tokens on a given blockchain protocol. Now, there are several marketplaces where the NFTs are traded in general. The most popular one are OpenSea, Crypto.com, NFT Launchpad, Binance, Rarible, and there are some also dedicated to the NFT project marketplaces. So these are native to each project. So the company that introduces this provide also the marketplace where you can platform a fee for every transaction. There is also the cross-platform purchases and sales are possible. Not very common at the moment. You wouldn't see people actually, listing their NFT in one market and then listing it also at the same time in the other market. But you can see people, buying an NFT from one market, try to sell it in another market. Information for transactions is publicly available, as everything when it comes to the blockchain. And now interoperability is still very nascent. And what I mean by interoperability is basically the ability to change blockchains. At the moment, when it comes to NFTs, this can happen with the software. We call it a bridge, basically, the software. And a very popular one is Wormhole. It's called Wormhole. And actually, this allows the connectivity between Ethereum and Solana blockchain. So basically, you can send NFTs across blockchains. But again, this is not very, very used at the moment. There is a potential as well. The blockchain itself provide a built-in connectivity, and such examples are to blockchains like Polkadot and Cosmos blockchain, but those are not really used for NFTs. And within the universe of the NFTs, we have the CryptoPunks. And the CryptoPunks actually are one of the earliest examples of NFTs on the Ethereum blockchain. They were launched on 23rd of June, 2017. They are 24 to by 24 8-bit style pixel art images that are generated algorithmically by software developed by Larva Labs. Now, their main inspiration is the London punk movement of the 1970s. Their number is finite at 10,000, and each one is unique, meaning that there aren't any two CryptoPunks that will be the same in terms of type and or attributes. There are 5 different type categories and 87 distinct attributes, which can range from 0 to 7 per CryptoPunk. This means that you can see CryptoPunks with 0 attributes, and you can see, I think it's only one CryptoPunk with 7 attributes. Now, the interesting part when it comes to CryptoPunks is that they don't comply with any token standards. Actually, when they were introduced, these token standards, they were not for non-fungible tokens, didn't even existed. And that's why they are based on a custom contract, which is based on a modified version of the ERC20 standard, with the standard that refers only to fungible tokens. This makes them kind of unique as well. But it's not the focus of the paper, but it can be a focus for someone that wants to look into the copyright of CryptoPunks. And then on 11th of March 2022, Yuga Labs announced the acquisition of CryptoPunks from Larva Labs. And for those that don't know about Yuga Labs, they are the developers of another popular collection of NFTs, Bored Ape Yacht Club and Mutant Ape Yacht Club. They're also very popular as well. And this was a very important thing for CryptoPunk owners, because they will actually let's say, solve the issue they had until then, this kind of gray area when it comes to commercial user rights of their CryptoPunks. Now, I have put here a couple of those CryptoPunks, so you know what we're talking about, and you might find them, funny or weird, but just for your information, this guy here was sold for 23 million. Okay, so actually all of them here are kind of expensive now to buy. Now, if you are an owner of a CryptoPunk and you want to, to just you want to buy, what are your options? And we have basically there are 3 markets, let's say. The first one is the Larva Labs market. It's the native market of Larva Labs. Now, this is a market that doesn't charge any platform fees. It means that for any transaction, they will not charge you an extra fee, for the platform. You just pay the transaction fee, the gas fee, and so on for the blockchain. Now, how this works? You have your wallet. You need to connect it to this market. Larva Labs has a distinct way to, when it comes to sales. They have a blue background for those CryptoPunks that are not offered for sale and they don't have any active bids. A red background for those that are available for sale, and a purple for those that have an active bid on them. So as a buyer, you go there, you can see which ones are for sale, which are not, and which one have an active bid. Now, a CryptoPunk can be listed for sale at a certain price. Now, in this case, if you list your CryptoPunk, you will incur respective fees for the transaction. You have to pay basically because it goes on chain, so you have to pay for the transaction fee. But however, as an owner, you have the option to just wait, just do nothing and just wait to receive a bid from a buyer for your CryptoPunk. Now, the buyer can either buy at the offer price if there is a CryptoPunk for sale, or bid for lower, or if there is not a CryptoPunk for sale, just go there and send a bid. Now, the bidding is done via escrow, and the owner may get notified depending on whether they have signed up to receive an email for new bids or not, or if they follow a Discord chat, because they are also on Discord there, so you can follow whether you receive bids or not. Of course, in that case, if the buyer is the one that initiates the transaction, is going to incur the costs for bidding, as again this happens on the chain. Now, if the buyer accepts the bid, then the funds from the wallet from the buyer transfers to the seller, and that's why the buyer needs to ensure that there are enough funds in their wallet to cover also for the gas fees on top of the price they pay for the CryptoPunk. Another marketplace that starts becoming popular with CryptoPunks and is already very popular with other collections is OpenSea. Now, OpenSea is a new marketplace, and they basically charge a kind of fixed 2.5% platform fee on the price of the transaction. And they do so because they offer a lot of different options for the seller and buyer. And of course, you have to pay for these services. Now, when it comes to CryptoPunks, you cannot readily go and sell them on OpenSea, simply because they, as I said, they are based on a different, a particular, let's say, standard that does not comply with what OpenSea requires. So in that case, you basically need to wrap it. And when we say wrapping, um, I will describe it very simply. It's just you take your CryptoPunk, you put it in a box, right? And this box can be traded. Or you can think of like you take your CryptoPunk, you put it in a digital vault, and you actually create a token for this digital vault backed from the CryptoPunk, and you can trade the token. So this is something that you have to do if you want to trade on OpenSea. And of course, OpenSea requires you to trade in wrapped Ethereum and not actually Ethereum, but this is a one-on-one exchange, so it wouldn't be an issue. You just need to pay. If I remember, when you need to pay the first time you will do that, you need to pay kind of a fee to set up this account. But once you do that, every time you use this specific the wrapped Ethereum, you don't need to incur any extra costs. Now, CryptoPunk can be listed for sale at certain price or in timed auction. This is a kind of interesting thing that OpenSea offers. And you have two options there, either in English with or without reserve price, or a Dutch type auction. I'm not going to go through much into details into that, but these are the options you have there. Now, for these NFTs that are not minted it means just put them on the blockchain on OpenSea. Like CryptoPunks are not minted on OpenSea, right? Sellers need to pay a one-time approval fee to authorize transactions between the contract and their wallet. And of course, once you do that, after that, the only thing you will need to do if you want to list your CryptoPunk is just, you just sign. So you don't incur any fees, extra fees for every time you want to list it after the first time. Now, the same thing is an offer made, a bid made by the buyer also lives off chain and is gas free for the buyer. This is another interesting thing that OpenSea offers. So, as a buyer, if you want to buy from OpenSea, this applies to every NFT, right? So you can bid for many different NFTs at the same time, and you wouldn't incur any fee until the moment that the owner actually is going to accept your bid. Now, in an auction, of course, if an owner accepts an offer, they are the ones that pay the respective fee for the transaction, and the settlement happens instantaneously on chain. Now, in an auction, the buyer can submit at least 5% higher than any previous bid, and in the same payment token as the auction to be considered towards the winning bid. So every time you see a bid, you need to always bid 5% higher. This is a requirement by OpenSea, and you need to bid at the same token, right? You cannot, for example, if the owner has set it to be Ethereum, you can bid in another token, like use Tether or whatever else, right? You can't do that. You need to be in Ethereum to be considered as a bidder. And of course, the other marketplace I haven't included because um, it's quite very similar, is Rarible, is the third one. This across all our observations, there are very few of CryptoPunks that happen on Rarible, simply because it's just a even newer market. Like I think it was introduced around 2020, late 20s, and it's not really, still is under development, and the options you have, if you compare OpenSea to Rarible, of course you would probably choose Rarible, OpenSea for the CryptoPunks, because the fees you pay are quite the same, but the options you have are more on the OpenSea, at least for at this stage. And now I'm going to move, you know, to, to focus on the paper. And what we basically do is, because CryptoPunks, as I mentioned, is one of the earliest collections of NFTs on the Ethereum blockchain. This makes them an ideal candidate for researchers because there is a lot of data there. And you can basically, if you find a way to get it and clean it, then it is a very good way to do some research. And what we did actually, we got this data for CryptoPunks from June 2017 to October 2022. This data comprises secondary market transactions, and we got it for using web scraping, and then we cross-validate the observations from two different sources. One was the Larva Labs website, and then the other one was Etherscan. And Etherscan is just the one popular explorer for the Ethereum blockchain transaction. So you go there, if you know the hash key of the transaction, you can have all the information that is related to that transaction. Now, someone can ask why you didn't use API, but the API is offered for the Etherscan, and the particular thing we wanted to do are not really that developed to get all the information we wanted. Now, we approximately we removed 17% of data that is not related to sales, offers, and bids. And this data basically concerned with minting, borrowing, swapping, or any other decentralized finance activities that is not really related to what we wanted to do in this paper. So you had transactions that may be just financing, or maybe swapping, or just I don't know, minting, or put the NFT, place the NFT in a vault, and so on. This is very relevant with what we wanted to check at this stage. At the end, we left with the 22,639 sales, approximately 94,000 offers, and 50 bids. This data has information for CryptoPunk, for the ID, so we know which CryptoPunk is traded, the transactions hash key, the block that was basically the transaction was placed, timestamp, wallet addresses of the sending and receiving parties, where from which wallet to which wallet the CryptoPunk moved, but also the address of the wallet that initiated the transaction, the value of the transaction in Ethereum and in dollars, the transaction fees, the gas price, the exchange rate, Ethereum to dollar on the transaction date, gas limit and gas used in units, and the function employed. This is more like which function of the smart contract was called to execute the specific transaction. Now, after the London hard fork update in August 2021, and this is, again, for those that don't know what is a hard fork, it's basically major changes in on the Ethereum blockchain that might refer to different things, but the specific hard fork changed significantly the way the gas and transaction fees are calculated. So after those changes, all our transactions have information about the transaction type, the base, max and max priority gas fees, the burn fees, and the transaction saving fees. So this allows also for some extra research questions we plan to do in the future. Now, we have kind of more descriptive statistics that just shows very specific ones. Actually, it shows only two tables. And that refer to the types. So these descriptive statistics are more related to per type. We have done the same per attribute, basically not actually per its attribute, but per number of attributes, including that a CryptoPunk has. As I said, can have from 0 to 7. But I haven't included it here because the patterns on those tables are not really clear as they are in terms of types. So the first, as I said, there are 5 types. So you can see you have a CryptoPunk that can be alien, ape, zombie, female, and male. And this column here, the first column here is more about the number of CryptoPunks that are this type in the entire collection. So as you can see, there are only 9 alien in the entire collection of the 10,000. And when you go to the next column and you see basically the sales we have during our period to the number of the type existing in the collection, there is some kind of, as we move towards the less, let's say, rare CryptoPunk in terms of the type, you can see that there are more number of sales that would happen on average. And this makes sense in a way that if you own a CryptoPunk that is not that rare, might be easier to sell. Or on the other hand, if you wouldn't easily, if you have a rare one, you wouldn't easily want to sell. So how you interpret these numbers, like within this period of identification, if you have an alien CryptoPunk, you would expect that it will be sold 1.22 times, and so on. Now, the patterns, these patterns are more clear when it comes to the impact of type is more clear when it comes to the next columns and the offers and bids. And here, basically, you can see that, as you have a more rare in terms of type CryptoPunk, you wouldn't easily put it on offer, right? So you can see that as we go to a less rare type CryptoPunk, there are more offers. So you wouldn't want to hold it as much. You want to just try to sell it. However, this reverses when you look at the bids. So there is, if you own a rare in terms of type CryptoPunk, there is this correlation there that you most likely you're going to receive a lot number of bids. There were people wanting to buy this rare CryptoPunk from you. Now the numbers in the parentheses, we just thought that we want to see more of a clear picture. So what we did here, we basically removed all these offers withdrawn and bids withdrawn. So you can see for the offers withdrawn, there were not a massive difference. And we will see that in a while when it comes to the prices as well. But for the bids, you see a lot of bids basically were withdrawn. So that's why the number drops so much. So it's like a bid, and then you decide, well, no, I have to withdraw it, or there is a better bid, so you withdraw the previous one a bid for more, and so on. And then these extra columns here is more like the number of offers withdrawn to offers and the bids withdrawn to bids. And you can see that when it comes to offers, people, when they decide to put their CryptoPunk, the offer basically, I don't remember whether I explained it. The offer is when the owner puts it, listed for sale, right? So you will see here that kind of we can say the owners, when they want to sell, they're more kind of decisive, whereas the bidders, there is some kind of more active, like they bid, they withdraw. Sometimes, you might bid for fun, and then you just say, no, I want to just take it back. Now, looking at the average prices now, and for sales, offers, and bids, and going to the first part of this table, of course, there is here a very distinct pattern, right? So you can see that the average price, as the type becomes less rare, drops. So of course, the ones that are more rare in terms of type within this period, they have received on average, they have been sold, sorry, on average in a much higher price. And you can see the difference between, for example, alien average price and male average price. This is a massive one. Another interesting thing when it comes to the type is this column. Is this column here? And here, basically, we have the average platform fee, and this is kind of, let's say, shows partially one of the investors, behavior when it comes to selling or trading anyway, CryptoPunks. And when they have a more rare type, they would basically prefer to sell it on the marketplace that doesn't charge platform fees. Remember that the other marketplaces charge like 2.5% fee on the price. So imagine that if you have an alien and you go to OpenSea to sell it, they're going to charge you a massive amount of fee on top of the price you pay. So you wouldn't want that. And of course, it's looking at the max prices again. Um, the more the type, the higher the max price that has been sold. And then you have, when it comes to female and male, there's not massive difference here. They are kind of treated the same. Of course, this doesn't apply with the minimum ones. And to be honest, when I was looking at this, I think this person here, when they sold this ape, I think by now they will regret it very, very much, because I think when they sold it, this was like very early stages around 2017. And now when they see other ape types being sold for millions, probably they will, bang their head on the wall saying what I did. Now, when we look at the offers, and again, there is again the same kind of pattern. Uh, when you own a rare CryptoPunk, you would of course offer it, and you want to list it for a higher price. And the interesting thing here, which is kind of not very kind of not in this one that much, but very very distinct in this too, is when we remove these offers that were withdrawn, the average price increases. And this is kind of interesting. How we interpret it is just, you're an owner, you offer it, and then, you say, okay, I think the price maybe is not the best. I want to offer it even more. I'll withdraw it. So the offers left were those actually that were very, very high. Now, when we look, what I want to mention here is when it comes to the max and min values, even when I remove those offers withdrawn, the max and min values remain the same. Now, here, someone would tell me why is zero. This can happen because someone at some point they just offer their CryptoPunk for basically free, right? And either they offer it in another, like they buy it themselves with another account, or some family member, and they just pay the gas fee. That's why you can see a zero minimum here in that particular one. Now, when it comes to the bids, again, there is kind of the same price pattern when it comes to type and rare type. but it's not that clear as with offers. What is interesting here when it comes to the descriptive statistics for the bids is basically when we remove the offers, the bids withdrawn, you see the average price drops significantly. And this this has can have multiple interpretations. Of course, feel free later to help with that. What we think here is just either these beats were in terms when it comes to the very rare CryptoPunks, there are people I have seen as well in the Twitter. They just go there, they bid for very high amount, and this is the owner of this rare CryptoPunk. They just say no, and then you leave it there, and then at some point you say, okay, I'm going to withdraw it because actually no one's going to, to accept this kind of bid, even if the price is higher. um, so these are just the two tables in terms of the descriptive statistics. As I said, we did the same but across not types but the number of attributes. There is some patterns there similar to the types, but they're not that clear when it comes to the number of attributes. This probably shows that there is just less correlation for the attribute itself than it's as clear as it is with the type. And now let's talk about the what we try to do in so far in this paper. And as I said, it's just our early days for this paper. We still have a lot of things we want to do. Um, but at this stage, what we try to check is the NFT price dynamics, the CryptoPunk, and holding period, considering the following two specifications. And I'm going to explain briefly what are those control variables or control groups here in a while. But the dependent variables here is just the log of price for a CryptoPunk and time t and the holding period for the CryptoPunk, calculated as the time difference expressed in days between respective sales. Now, when it comes to this bunch of control variables we have here, so um, when it comes to the static control variables, and this is something that, for example, when you look at the bonds or stocks, you can do, but you can do for CryptoPunks. So this category includes the color. So what is a color? It's a dummy variable specifying the presence of a color in CryptoPunk. So we wanted to see whether there is some relationship between the color or the presence of a color on the CryptoPunk and the price. And the colors we look into, it's just this very basic palette: black, blue, brown, green, orange, red, violet, white, and yellow. And how we did that. And I think maybe if you have more technical questions, Lavinia can answer. This is the image. It's CryptoPunk extracting all their color shades and then group them, in one of this category. Each color dummy will take a value of 1 if the color K is present and 0 otherwise. Now, these CryptoPunk PNGs images are individually downloaded from the CryptoPunk website, and then they are processed in R. The other variable here is complexity. And when it comes to complexity, is a variable defining the number of colored pixels that constitute the CryptoPunk. And each CryptoPunk, as I mentioned, is 24 to 24 pixel image for a total of 576 pixels. Now, the colored area, however, can vary from a CryptoPunk to CryptoPunk depending on how many pixels are colored, basically. So we process this image for its CryptoPunk and count the number of colored pictures, where the more colored pictures indicate a higher complexity and vice versa. Now, of course, we have a dummy variable for the type, and then we did the same for, sorry, for the attribute. Here, of course, we mentioned 88 as I said, 87 unique, but there is one another we also consider we consider it as attribute as none. So there are some CryptoPunks that have no attributes on them. Then when it comes to the attention control variables, we have two main variables here: Google Trends weekly global search volume indices for NFTs and Ethereum, and their lagged versions. So this what we call it attention. These are more news related to NFTs and Ethereum, and we wanted to see whether they have any impact or they have any relationship actually with the price. And then when it comes to the market control variables, we have a variable about the congestion, a variable basically indicating the Ethereum average block time as a proxy of block time congestion. So we wanted to see whether there is any relationship here, whether the network becomes more congested, what happens to, whether this has any, link there with the price. And then seller initiated is another dummy variable, taking value of one if the transaction is initiated by the seller and zero otherwise. As I explained, we can see which wallet basically initiated the transaction. And we have a dummy variable for OpenSea and Rarible. Then we include the platform fees if there is a platform fee, and the transaction fees is basically the total fees you pay for each transaction. Of course, we have also include the close price of Ethereum in US dollars on the day of the transaction. Apart from those control variables here, we also want to look into the forks. And what we did here, we set a dummy variable indicating whether the sale occurs the same day of a fork or 1 to 7 days before or after. So we wanted to see what happens to the holding periods and price around the forks. Again, forks are changes in the blockchain. And actually here we plan to do a little bit more, if possible, looking at the different categories of forks. For the moment, we just treat them all as the same. And then we have a year dummy. Now, in terms of the investor behavior control variables, we have this kind of we have a variable introduced here. We calculate it. We call it buyer indecisiveness. It's a variable proxy for how indecisive a buyer are on day T, computed as the sum of the bits withdrawn on the day divided by the total bits on the same day. So we try to see whether, a buyer taking back, withdrawing their bits there is any relationship with the actual price. And we did the same with the sellers as well. So the higher the value, the higher the indecisiveness, and so on. Then we basically have introduce a variable here. We call it different community. Now, the idea here is that this different community is a dummy variable that indicates that the sale is made outside the community, where communities are detected using the Leiden algorithm. So this is more an algorithm that detects communities and defines what is a community. And so the principal idea is we wanted to see whether there are some wallets that always come together, and if the sale or a purchase happens outside this, has actually a massive difference in price. Then we have a variable for count beat, the active beats actually, and then we introduce the super trader variable. And super trader, we thought about that it will take a value of one for a wallet that is involved in the transactions that most in sales in the 0.999 greater than 0.999 quantile. These are, you can think of those as the most active wallet. So basically, you will see these addresses appearing uh, all the time for offers, bids, and sales. So we just classified those and took those into account to see whether when they trade, whether there is any relationship with the price there. Because for a market that is relatively new and there are a lot of people that join there that know nothing, sometimes, for someone that is very active and it tweets a lot and talks about it and is very popular, you can treat him as a guru or something, and you might say, okay, this guy decides to sell now, maybe it's a good time to sell. So we wanted to see whether there is a connection there, and we basically tried to split it a bit further. This one we did the same with the buy and sell, and then also with the bid. So the bid is a dummy if at least one super trader is bidding for the CryptoPunk. So we wanted to test this as well, whether it has any relationship with the price. And then we have the count of unique bidders and count again unique bidders that are super traders. Um, and the two final variables here is the rarity. And when it comes to the rarity, is basically a score we introduce here. So this score is between 0 and 1 and assigned to each CryptoPunk. That indicates the rarity or scarcity, if you want, of the respective, with respect to the population, where higher score denotes higher rarity. Now, it is computed as the product of four sub-pillars: the type score, the attribute score, the combination of attribute score, and the number of attribute score for each CryptoPunk. Uh, so the score of each sub-pillar is in turn calculated as the ratio of CryptoPunk to the population with the exact specific characteristic. So I'm not going to go too much into details, but this rarity score is just a sub-product of four pillars, and each four pillar is calculated as a ratio. Now, and finally, we thought, okay, so we're talking about the NFT market and digital assets, and let's see whether there are bubbles and how this can affect prices. And that's why we introduced the dummy variable that takes a value of 1 if the sale happens during a bubble period. And we basically use the PSY test, which is a recursive augmented decay Fourier algorithm developed by Phillips et al. To detect bubbles. And then we would just plug it in as well in the model. Now, in terms of the of the results we get, um, here you can see, there are some kind of, in terms of the color, we don't have some massive, something that stands really out. Um, you can say that there is some relationship there. When there is a lot of white color, people tend to want to that there is this correlation there, that they tend to want to basically sell it in a higher price. And then when there is a lot of black color on the CryptoPunk, they tend to hold it less. Of course, this is just not a causal effect, but it seems that there is kind of a relationship there. Now, when it comes to the pixels, it seems like a very, very small difference for those that have a higher complexity. The price seems to be a little bit, but it's not that very, very significant here in terms of the price. And there is no, of course, significance when it comes to the holding period, how long you're going to hold the CryptoPunk that has better or higher complexity. Now, when it comes to types, we get something we would expect. So, relative to the females, The alien actually is, look at how massive is the difference. This is our percentage, right? So, and then you can see here as well the holding period. So I suspect that even if we exclude any of the other types, the aliens is going to always be significant result higher in terms of the price and the holding period, because it's the one that is the rarest, and it's the one that always, if you have it for some reason, if you were lucky enough initially, I forgot to mention this, initially all these 10,000 CryptoPunks, they were put on the blockchain and they were given for free, right? So you only pay the gas fee to take them, nothing else. So if you were lucky enough to get this one, now probably you will be rich beyond anything else you would know. Now we did the same with its attribute. So here the idea is, if you have the attribute one, if you don't, zero. um, and the how we interpret it is, the is like, if you have it, or you others you don't have it at all. um, and for some attributes there is some kind of relationship there with the price. We didn't have yet look into this more, you know focus more on this, but it will be interesting to see whether there is anything particular. Why, for example, let's say if the CryptoPunk has a bandana, it's you're going to sell it. It's just the price seems to drop, or they hold it less. Or if it has a goggle or a beanie, whatever, is extremely high. And why this is the case? These are things that have to do with investor behavior and or something else, and we would love to see this in more detail. And here is just all the, of course, in here, just to mention, we haven't included those attributes that have, because there are some attributes that have no significant relationship there, so we didn't include it in the table, because as I said, 89, it would be just massive and it wouldn't make any sense. And just to continue with and wrap it up, almost there now. So when it comes to attention control variables, there isn't any. It seems that there is no relationship for news related to Ethereum and NFTs. But when we take the lag of this news, it seems that there is some kind of a negative impact on the price, or relationship, a negative relationship there with the price. Unfortunately, here, although we would love to see some kind of more better coefficients in these ones, because it will be very interesting. I guess we didn't get them, and I suspect the reason why, because in the initial, when we run the sample, without including the sell-off happening in the summer, these variables here were kind of important, now become non-important. So we might look, maybe we want to split further. What I want to say here is about community. And although this is not significant, it seems like it was significant before we include the summer downturn. But it seems like it's like, if you are outside if you trade outside the community, basically the price is kind of higher. It would be great if we can take this further. And then about the rarity score, I just want to say that the more rare it seems, the price is kind of, there is a relationship there. We would expect that. Of course, this needs a little bit further investigation, and of course the bubble. Uh, Sales that happened during the bubble period, it seems the price is higher, which is something that you would expect anyways, but there is no impact in terms of the holding. And when it comes to congestion, seller initiated, it seems the price is lower. This is kind of it's kind of the same we see in the stock market when there is a seller initiated transaction. Now, interestingly, here when it comes to OpenSea, if the sale happens on OpenSea, it will be the difference with Larva Labs is, is massive. And basically, it seems that the holding period for those the trading in OpenSea is less. So it's more an active market compared to Larva Labs, and compare basically to the investors attracted in OpenSea compared to Larva Labs, I would say. And that's why, but with Lavorariable, again, there is not any massive difference here. And finally, when it comes to the forks, what is interesting here is that it seems that there is some kind of impact in the windows before the fork happens, but nothing happens after. So basically, this kind of shows that, once the people know that there will be kind of a change, there is some kind of impact there, but then after that, they have done what they have to do and nothing happens later. We haven't tried to increase the windows. This is only 7 days, maybe try 14 days, maybe we get the same or different results. We want to try this in the future. Now, when it comes to and to wrap this up, we have these two graphs. Um, this is more like the buyer indecisiveness and the seller indecisiveness. You can see what we can say is that, in a sense, if you check this part here, you can see that this the seller indecisiveness kind of follows the buyer indecisiveness. And then in terms of the bubbles, here we plot it, and you see there are very, very distinct bubbles here in terms of this. But again, because the values here were quite different, there is a massive difference here. So we just let's say that we zoom it out, so you can see also these bubbles during the initial stages where the prices were smaller than this. And finally, we just decided to plot this. This one, in a sense, shows you the network, how happens, and the squares is how active is basically a wallet. And you can see this guy here, he's a very active one, and he trades a lot along with this one. And of course, the lines here show, the connection with which one these ones are basically connected. Of course, these are only the top, the top nodes. We couldn't include every node because the graph will be just a mess. Now, you know, certain static attention, investor behavior, and market factors are linked both to the way pricing occurs in the specific market and the duration a CryptoPunk will remain in certain wallet before it's sold. Now, major changes on the blockchain network appear to contribute higher prices and shorter holding periods in the 7-day interval before the change takes place. And the occurrence of bubbles is associated with higher price, but not the length of the holding period. Um, it is still, we want to look at several things. As I said, this is a work in progress, but we felt that the paper is at the stage now where we would like to receive some feedback. So I would just open the floor now to people to comment or ask questions or give feedback. So thank you so much, and I'm looking forward for your comments.
Thank you indeed, Efthymios and Markos and Lavinia, for a very interesting paper, absolutely fascinating. And we congratulate you on taking the initiative of going into this interesting area of non-fungible assets, and then looking at the various types of CryptoPunks. It's interesting all the way. First of all, the way you motivated the paper was very helpful, giving us an excursion into what is happening in the area of CryptoPunks, and then highlighting the theory, key issues in the literature, and then the way you have been able to obtain um, um, very high value data, and so far what you have uncovered from the high value data. This is absolutely helpful. During your presentation, there were some comments made in the chat, and maybe we should take the opportunity of going into these comments, and then I should be able to ask participants to use the reactions facility on Teams, raise their hand and try to, and then ask questions or make suggestions or comments, as maybe. Now, there are comments from myself. There are also comments from Vasilios Papa, who's not new to Center for Global Finance, indeed has presented a paper to us recently during the first term. So, Vasilios, maybe you can now speak to the comments that you kindly generated in the chat, and then we can talk about it. Thank you.
Hi, thank you, Victor, and thank you, Themis, for the presentation on this topic. It's a very new, definitely, topic. So my comments are mainly for the nature of these NFTs, and I could not get, or actually, if you have any information on the buyer and the seller attributes, because from the statistics that you present, if the price is varying that much, so the minimum and the maximum values are all over the place, so that tells me that there is no kind of a fundamental value, or like a value that people would kind of agree on this. So it is basically as if somebody is, just coming up with a price out of thin air completely. And ultimately, what is the value of this NFT? So it is like a computer-generated art, within quotes. So what can people do with it? Why does it have a value? Why would somebody want to pay money for this? This is what I cannot understand.
Yeah, thanks, Vasilios, on the issue of evaluation. Yeah. So
yeah, I can just respond. So this is a question. It's just by doing this research, you always ask this question, right? And I think this is kind of a very, very popular question when it comes to finance people, right? So we always wonder what is fundamental value, what is the intrinsic value. But on the other hand, you might think maybe if you look from the way we we do things as finance people, and we try to approach it from this, probably you would say fundamental value is zero, right? But I would just put into the table, like, what is the fundamental value of the internet, right? So what is the fundamental value of the CryptoPunk? So maybe there is some value there when it comes to to the people that use it. As I mentioned, this CryptoPunk come with distinct commercial use. So we haven't tapped into this at the moment, but it's a good comment. We might look into this. It was also something we thought about it. If you own this CryptoPunk, it comes with a commercial use. So there are some people basically use it for their small businesses, and they use it as a trademark, right? And generate some um, some revenues there. So this is information we haven't gathered yet, but it may be a good angle to look into it. But I would agree with you that it is a market specifically for these CryptoPunks, because if you talk about NFTs in general, I would disagree. But I will come to this very soon. But for the CryptoPunks, yeah, it might be a market that is basically just a Wild West driven by just people going there, investors, maybe speculators, maybe people that would think it's art, and there is, the way they price it is just very subjective. But if you look at the NFTs in general, there can be fundamental value, because the NFTs, when you mint your NFT on OpenSea, there is an option to charge royalties. So every time basically there is a sale, you get royalties. And if you have access to this information, you can basically price it. It's the same idea as, just to have a bond or something. So you have the cash flows there.
Yeah,
Um,
I understand that you can price it, and I can understand that there are royalties. I just don't understand why somebody would want an 8-bit alien JPEG. I
well,
don't get it. And in fact, that's why I'm asking for the attributes of the buyers and sellers. And you mentioned them as investors. I would put it as investors in quotes, because if these are different teams, IT people or computer geeks, let's call it like that, and one is generating one set of NFTs, and the other is generating the other set of NFTs, and they say, okay, there's very great value in these ones, so I'm just going to buy yours for 20 million, and then you buy mine for another 20 million. So it's like a zero-sum game here, but it's just between these
oh,
very,
yeah,
very unique set of
yeah.
people that kind of value this art,
No, no,
which is
I
similar
get,
as if you go to a gallery
yes,
and somebody stares at a Monet and says, "Ah, I'm going to pay 20 million for that," and
right.
you see that and say, "Oh, this is crap."
Right. No, no, I get, no, no, I get your point 100%. So, one of the things we think to do as a next step, and we mentioned it at some point, but we haven't, done it yet, is
Hello.
look at the portfolios of those investors. So basically, all those investors, I can tell you because I have done it, but we haven't put it into research. But I have take a look in a couple of them, and you can see everything they have in their wallet, right? So from there might be a way to decide what is, or as you mentioned, investor or not. But this is a very good comment, and thank you for the. I mean, this is something we probably need to plug it in, to pin better this type of people coming into this market. So this is a very good, comment. Thank you for this.
Yeah, thank you, Vasilios,
Thank
and
you, thank you, Thomas.
thank you, Temis. In fact, the last point is related to the comments that I had jotted down. And I think the way you answer Temis is consistent with where I was looking at it, was say there is an opportunity for exploring a asset substitution opportunities, given that you have different types of assets of CryptoPunks, and so you have a portfolio of NTFs, and I guess when you mention the wallet, you are referring the possibility that investors may be able to substitute and move from one type of CryptoPunk to another CryptoPunk. They may shift their portfolios within the holding period. And now, if they do, then there is an opportunity to explore why they do. The standard finance theory would suggest that they do because of risk and return dimensions, that they think they can be able to minimize risk if they do, or they can get high returns if they shift from zombies to apes or to aliens.
Actually,
And
to just to add to this,
yes,
you know, I was very careful mentioning wallets and not something else, because one of the difficulties we will have doing this, I mean, you can see what the wallet includes, but you don't know who owns this wallet. And there
yeah,
might be people that own multiple wallets, because they want, because they can. So in a sense, even if we do this, we can just talk about the thing about kind of wallets. Assuming that each investor is a wallet is not probably the right way to approach this, because again, you don't know the identity of the owner. You just see the address and you just see a wallet. Now, a wallet is not an investor, right? It's just a wallet. It might be one investor, and but some wallets might belong to the same person. So it's kind of makes it a little bit harder. But again, all these points are great. From what my understanding is that we basically need a clearer picture when it comes to the investors and which investors come to this market and what they want to do.
Okay, yeah, that's very helpful and a response. I think another observation I had was just a glimpse, a quick look at the descriptive statistics table that you shared with us. And it was interesting to see, there are the various dimensions. I think, no, that was before. Yes. You have sales here, you have offers, you have bids. And I say maybe if some other related information is available, one could be able to compute the bid ask price and to be able to see what lies behind the bid ask price of various types of CryptoPunks from alien apes, zombie, female, male, if that information is available, or it's perhaps that you do it somewhere in the paper, which is part of the investigation. I just trying.
Sorry, you
Yeah.
you mean here to match the bid with the specific sale
Yes.
happening. Yeah. I mean, we could do that. I mean, this is how, for example, when I don't know whether I mentioned, but when I say the bids withdrawn were excluded, what I did is matching the particular bid with the
Yes.
specific bid withdrawn. So yeah, there is this information there. We could potentially do this. Yes.
Excellent. Good. And then I also was thinking, just putting one of traditional finance theory on the role of transaction costs, and if any, what type of transaction costs exist here, and if any. I mean, the type of transaction cost that arises from for example, these transactions, are they validated using some charges, a fee, commissions, that type of very important transaction cost, which in a way provides a motivation for trading or non-trading. Are there this that is your web scraping of the data, which by the way is a very innovative way of getting that data. Does it provide you information with any type of transaction that could perceive transaction cost? Because this is one of the arguments that is helpful in finance theory, to understand the behavior of asset prices. Okay, so that was thinking very widely, and of course that's the information, the role of information asymmetry in the NFT market. I guess information is freely available and costless, but maybe not. Again, maybe only the different IT generators of the NFTs can have information, and therefore other types of players in the market may not have that information. I don't know the answer. You possibly do. Yeah, but very interesting. Very interesting.
Yeah, we thought about. I mean, still we're working on things on how to approach. That's why we included a couple of variables there, like the super traders or something, because for a market that is not well known and obviously will attract different type of traders, from speculators to people that just do it for fun to whoever. I guess someone that is very active in the market is going also to attract a lot of attention in terms of his the way he trades.
Yeah.
So, but then this comes back to what Vasilis mentioned about, okay, yes, but maybe this specific person is a friend of the other guy, and then they just, decide to exchange collections and so on. What makes it interesting because, okay, maybe we need to look more into the profile of those people and see what they are doing in general, and not particularly in that the specific market. Now, the difficulty with this type of research is the availability of data. And although, with, as I said, the CryptoPunks, yes, they have these problems in terms of they just uh, generated by a program. So what? Who cares? But then when it comes to other collections that might not generate it by Pro, or maybe they do as well, the data is not that much to just allow for this type of research. So basically, we try to figure out a way here to connect this with what we know and the theories that are possible to be connected. So, as I said, these comments are really, really good to have, and probably will allow us to think a little bit better of how we can pin this better in terms of the interpretation.
Thank you indeed. I mean, I would possibly taken this opportunity to invite in Lavinia if she wants to join in the discussion later as we go. But for the moment, let me take. I think there is a hand up of Athena. Athena, you have a question.
Yeah,
A
thank you,
comment. Yeah.
Victor, and thank you, Themis, for the presentation. I think it was a very interesting presentation, and I definitely enjoyed it. I was, thinking of what both Themis and Vasily said about the profile of NFT investors, and I was wondering whether it could be that investors decide to invest on NFTs because of diversification benefits. And I'm not familiar with the literature on NFTs, but I'm assuming it would also make sense to see whether returns from NFTs are possibly highly correlated with returns from other asset classes like stocks, bonds, etc. But thank you, Themis.
Um, Thanks for the comment and the question. Yeah, I mean, it's good. It's just it's something we might also as well look into. But the difficulty, as I said, in that is just, you see a wallet, and any approach then would be kind of, we don't know the investor. We might see it, general as markets. Maybe we can include a variable in terms of, the same period, how the stock markets, perform, and whether there is some correlation there in terms of the prices and so on. But yeah, I mean, it's whether they come into this market so far in terms of the literature and the existing papers. I think there is this popular perception that also Vasilis actually mentioned, and the some papers out there have about this is speculative market. There is no fundamental value there, but I would say I would want to defer a little bit because I think the problem when it comes to this type of research is we try to approach it from the way and the things we know. Like, we are finance, we try to approach it from a finance theory. But I think what we need to do when it comes to this type of research is try to see it from a different perspective. I don't know yet which perspective is that. We're still working on that. I think that we should be a little bit more open-minded when it comes to this. It's not about the CryptoPunks per se, but it's about the concept of NFTs and how this actually can potentially be used for something better. Not a speculation, but how they can be used for applications on the decentralized finance that can improve the way we do things, make them more efficient, maybe improve financial inclusion, and so on. So these are the ultimate goal of doing this. Of course, we're not there yet because, as I said, all these comments are great because they just pave a way we should go, and so we'll see how this will go.
Thank you, Athena, for those observations, and Efthymios for continued discussions and observations of very encouraging research. I don't see any hand up unless I'm not seeing the full screen. But let me welcome Lavinia and give her an opportunity to say something if she wants to. That is, yeah, to us. Yeah, to go ahead.
Hi, everyone. Thanks for giving us the opportunity to present our paper today. I think Efthymios answered almost everything. I just wanted to give like a very short additional comment for the fact of having maybe friends or a group of friends like trading the same NFTs or similar things. No, so this is something we try to capture with this community variable. So, for instance, the community size are also of 2 or 3, 4, and bigger. And this is exactly what we wanted to see. Okay, we cannot for sure say if a wallet is maybe having, if a person is having multiple wallets or if this wallet belongs to people that knows each other. So we wanted to detect like somehow these groups within this network, market, whatever, to try to see if there are some patterns of behavior in price and so on. So because at the beginning there was also the idea of potential discovering of wash trading. So we were thinking, what if 2 or 3 people or wallets are trading the same NFTs just to give the illusions of higher price, and then they sell at a higher price outside the community. So that would have given us like a sort of sense of potential wash trading that we are not 100% sure, but at least we can see something like across different type of groups, communities. But yes, I think that having then an understanding of the profile of the investors or wallets is the next step. Yeah, hopefully for this paper or for a new paper, because but that's great. Yes, thank you for the comments.
Absolutely. Let's I'm optimistic about this, and thanks very much for highlighting this and the future of this very, very important and very interesting and timely research. Yeah. Welcome, Richard. You got your apologies in the meeting. I think Richard is the regulatory guru on cryptocurrencies, and I think definitely he has been busy on another meeting, but I guess that at one time after listening to the recording, which we shall share with him, he might have a point, a comment, observation on regulatory issues or how this the non-fungible tokens and how this incorporated into the traditional finance. Yeah. I don't see any hands up, but I wonder whether Timios, you could give us a flavor if yeah, you have a sense at the moment in terms of how this work will shape the behavior of practitioners, the participants in this. I know the traditional way in which regulators are reacting to cryptocurrency, are trading. But how about the trader, the participants, practitioners? How do you see this research influencing their behavior in the years to come? We're just trying to read very much into your research, thinking 5 years ahead. An impact case study, or say this work has come out and it has changed the way practitioners look at the whole area of cryptocurrencies. Any insight so far, or yet to be formed?
Well, as I said, these are early days for the specific research. But as I mentioned before, why I think looking at this market is a kind of important, and any research that is related to this brings us a step closer to understand how the market works, because the idea of an NFT as it is has several implications for different fields. And as I mentioned before, in this research, we try to approach it from the finance perspective. But if you try to see it from the legal perspective, CryptoPunks are an excellent way for someone to look into copyright and how basically, um, you know, something that where you don't have actual description, you didn't have until recently exactly a description of what you buy and what is the commercial use of what you buy, and then despite this the price sold were crazy. Maybe it's so it would be an interesting thing to look at from that perspective, from the legal perspective. And then that's why I mentioned there was this change last year where now these CryptoPunks are attached with a commercial use, which is great. And we might want to see, whether there is a difference there in pricing between then and now. All these are kind of interesting. And then on top of this, as I as I said before, the decentralized finance. And you know, um, let me give you an example of how a CryptoPunk was being sold at some point, and this was very recent. This is a market. Why is it interesting? This is a market that is very dynamic. If you go to today and you check how transactions are happening, and you go after a month, you're going to see smart contracts never existed before. And you are going to have to spend, again, a lot of time trying to understand what is going on. And this is why these kind of papers and research is important to start, just mapping what is going on. For example, when we decided to expand our data set and we went back to web scraping and get the data, and I was looking on the smart contracts. I saw, for example, a CryptoPunk being sold using the following process. So you can basically contribute 60% of the value of the CryptoPunk and then borrow 40% of the remaining value, placing the specific CryptoPunk as a collateral, and you take it, you make a loan. And if you can't repay, then the CryptoPunk goes directly to this company. This is kind of very similar concept like your mortgage. And it will be very interesting to start thinking about how this can can be implemented in other things, and how basically whether this actually is more efficient than what we do now. And because there is this discussion, right? Because we both, I think Lavinia as well, we discussed with several people, and you have some more traditional saying, why we need the decentralized finance, because we do things great now. Things are working. The traditional finance works. Why would we want to complicate things, and we go to do it with in unknown ways, um, more technical, complicated, and might be very hard for people to understand, might be easily tricked. And you have people that think maybe putting technology into traditional finance maybe makes things better than not worse. So I think this is what we as researchers should aim for when we look at these markets, is try to just uh, each time provide a little bit more towards the understanding and how basically we can implement all those new concepts in a way that can contribute to the social welfare in general.
Thank you very much, Temis. I think that's very reassuring in terms of the potential impact of this work, and definitely, I have no doubt this will help. There is quite a lot to learn from this paper and from this presentation. As any empirical paper is concerned, data is very important. And I see you have taken excursion into methods of data scraping. I hope that this will attract a very important component of the paper when it is fully written up in terms of the data generation process. It may well be the case that this type of data generation process improves what we already use as a way of collecting data. Now that people are using these methods of big data, trying to get infinite amounts of data, and especially in AI processes. The fact that you have been able to obtain enough data to be able to put together these tables of statistics and run regressions is absolutely very comforting. Some people will be shying away from that work, saying data is going to be a problem. But you three went ahead and bashed it, so well
No,
done.
we are lucky because we have our own in-house hacker. So Lavinia is actually here. It's just she's just coding things and just happens. So it's not, as I said, this is one of the things that makes this kind of research so far difficult, because there are not a lot of APIs that provide this information. Web scraping is not that straightforward because you need to basically account for the security of the web pages. Now the web pages, they have this kind of Cloudflare or whatever else to security. So basically, if you try to hit the web, visit the web page continuously to just get the data, is going to stop your code because they will think that you're attacking the website. So basically, you need to create a code that changes VPN. So it's not that straightforward. It can happen if you have the skills, and maybe as you mentioned, this is also a paper that maybe as well provide the idea of how we can do this type of research. But at the same time, because you talk about the data, another we had this in a brief discussion we had before the start of our presentation, and there I mentioned to you that this is an exciting research, but also is very challenging. And it's challenging because even if you have the data, there is no documentation out there to help you interpret it. And we spent really many days and hours trying to understand what certain smart contracts were doing, simply because there is no information there. They don't tell you. It's just someone writes a code, put it in a smart contract, it's executed, and you have to figure it out how this works. And there is no, you know, you have to visit forums, you have to maybe ask around, and there are people, of course, that are, you know, programmers, they might understand this language better. But this should not, as I said, this should not stop us as researchers to want to do more and learn more about this market. So hopefully, when this paper comes out, it just provides also, you know, a way we can approach this type of research.
Indeed, and let me reiterate our thanks for you, Temis, Lavinia, and Markos, for this interesting work. You have taken us into this excursion into cryptocurrencies, you know, very promising, and we wish you a good luck in developing into a full-fledged paper. And continue to generate ideas. And as usual, when we share this recording with our Center of Global Finance fraternity around the world, don't be surprised if you get contacts of interest or that want to also maybe work with you, extend this analysis. You know, let's say, as usual, put our hands together and thank you for sharing this work with us.